Spit out the blood, tape up those knuckles, and step under the flickering basement lights because the bell is about to ring on the nastiest underground brawl in financial history. Welcome to the Fight Club, contenders. The main event flashing on the chalkboard tonight is titled Breaking. XRP sends a strong signal. Crypto traders prepare for a move. And if you are currently curled up in the corner of the ring crying over a $1.39 spot price, you are entirely misreading the rhythm of this championship bout. The retail crowd is getting absolutely pulverized by the market makers right now. The suits are throwing relentless left hooks on the perpetual futures markets, driving the funding rates into the dirt to make it look like our fighters completely gassed out and ready to hit the canvas. They want you to throw in the towel. They are deliberately engineering this brutal, agonizing price suppression to break your psychological jaw and force you to surrender your physical digital assets for absolute pennies. But down here in the gritty underground where the real money changes hands, we do not watch the flashy combinations. We watch the footwork, and the footwork is sending a massive, undeniable signal. While the retail tourists are bleeding out from 1,000 tiny cuts, the heavyweights are quietly stepping into the dark alleys and buying up every single drop token. We just tracked an absolute monster of an accumulation phase. The sovereign whales did not run from the bloody canvas. They aggressively moved in and swept up hundreds of millions of XRP, while the public was blinded by the sweat and the fear. This is a classic rope-a-dope strategy. The institutional cartels are absorbing the retail panic, letting the weak hands punch themselves out of the market entirely, and hoarding the physical float right before they unleash the ultimate knockout blow. The strong signal that the smart money is picking up is the sound of the dark pool vaults slamming shut. You have taken the hits, you have survived the grueling regulatory training camps, and you are still standing. Do not let the engineered exhaustion of a manufactured bear market convince you to quit the fight right before the championship rounds begin. The suits are locking the doors to ensure they are the only ones holding the championship belts when the massive repricing event occurs. You are witnessing a mathematically calculated extortion of the weak. The strong signal is flashing red. Stay in the center of the ring, ignore the jeering crowd, and focus entirely on the accumulation. Let us step away from the bloody canvas and walk into the smoke-filled back room where the billionaire betting syndicates are actually rigging this entire match. The mainstream sports commentators on the corporate networks are desperately trying to convince you that the big money has completely abandoned the cryptocurrency arena due to the brutal macroeconomic headwinds. That is a pure, unadulterated hustle designed to keep the odds firmly in their favor. If you bypass the public betting windows and look at the raw ledger books of the United States Spot Exchange traded funds, a completely different reality punches you right in the gut. The heavyweight financial titans commanding these heavily regulated investment vehicles, entities like Bitwise, Canary, and Franklin Templeton, have quietly accumulated an absolutely staggering stockpile of over $1.3 billion in physical cryptographic assets. How does $1 billion of pure concentrated buying power enter the arena without instantly blowing the roof off the spot price? The answer lies in the highly secretive, unregulated back alleys known as over-the-counter dark pools. These massive asset managers are not walking out under the bright stadium lights to execute their billion-dollar acquisition orders, because doing so would instantly trigger a massive price explosion and completely ruin their accumulation strategy. Instead, they are utilizing localized bookies to systematically absorb the discarded tokens of every panicked retail fighter who spits out his mouthpiece and quits. To perfectly camouflage this massive resource grab, those same liquidity entities aggressively short the public futures markets. By driving the open interest into the negative, they manufacture a highly convincing illusion of a brutal, unending beatdown. The civilian sector looks at those metrics and assumes the asset is actively dying, while the institutional cartels are literally backing up armored trucks to secure the floating supply at a steep wholesale discount. Furthermore, you must synthesize this dark pool hustle with the explosive scaling of the RLUSD stablecoin infrastructure. The RLUSD network capitalization has aggressively expanded past the $1.5 billion threshold. The legacy banking syndicates are hardwiring their cross-border liquidity operations directly into the Ripple framework. The mechanical burn rate is actively accelerating on a massive global scale. Every single time a multinational corporation executes a cross-border transaction utilizing RLUSD, a fraction of the native XRP token is systematically incinerated by the network code. They are silently hoarding the physical float, while the network simultaneously burns the remaining reserves. This is the exact cryptographic formula for an unprecedented violent supply shock. The fix is officially in. We must now kick open the doors to the International Promoter's Office because the momentum triggering this massive market reaction originates far beyond the dirty alleyways of the United States. A veteran fight promoter understands that true systemic wealth is always generated through global geopolitical television deals, while the civilian sector is completely mesmerized by the minor sparring sessions on their mobile trading applications. Our international fixers have intercepted critical contracts from the highest echelons of European and Asian financial empires. Weeks ago, we confirmed the highly classified integration of Ripple Prime into the National Securities Clearing Corporation directory under the undisputed heavyweight champion of Wall Street, the Depository Trust and Clearing Corporation. That precise tactical maneuver effectively hardwired the decentralized ledger directly into the absolute beating heart of the American traditional equity settlement machinery. But the new intelligence that confirms the massive building momentum is an unprecedented European convergence. We have empirically verified that Société Générale, the titanic French financial institution commanding nearly $2 trillion in global assets, has officially activated its MyK-compliant euro stablecoin directly on the Ripple infrastructure. Concurrently, the Japanese banking leviathan SBI Holdings has successfully deployed a massive blockchain-based corporate bond specifically designed to reward traditional retail investors with physical XRP. When trillion-dollar sovereign banking entities voluntarily integrate a decentralized cryptographic ledger into their core operational machinery to settle corporate bonds and stablecoin transfers, it mathematically guarantees a tidal wave of future utility volume. The sudden momentum spikes are the market algorithms violently attempting to price in this massive international adoption before the retail sector realizes the fight has already been rigged in our favor. The legacy financial system is actively crumbling, collapsing under the unsustainable weight of its own inflationary debt spirals, and Ripple is seamlessly installing the cryptographic fortifications on a global scale. The corporate media is actively deploying psychological countermeasures, broadcasting terrifying macroeconomic narratives to keep the public completely paralyzed by fear. They want the civilian traders to abandon their posts during these brief moments of volatility so the sovereign cartels can monopolize the ultimate global settlement empire, trust the raw intelligence of the underground syndicates. The momentum is absolute, the contracts are signed, and the international heavyweights are stepping into the ring. Prepare to grab your cut of the purse and initiate the ultimate extraction protocol, because recognizing the sovereign manipulation and the structural hustle behind this building momentum is absolutely useless without a highly regimented strategy for cashing out. We have empirically proven the covert dark pool accumulation by the billion-dollar exchange-traded funds, the exponential utility growth of the RLUSD stablecoin engine, the massive DTCC systemic integration, and the colossal international banking deployments. So, what is the ultimate mathematical destination of this digital asset when the algorithmic beatdown is permanently stopped and the referee raises the hand? Highly classified macroeconomic risk assessments, continuously refined by elite quantitative odds makers at Tier 1 institutions like Standard Chartered Bank, have established a mathematically grounded baseline target of $8 per token for the conclusion of this specific geopolitical bout. To the uninitiated civilian spectator currently psychologically traumatized by months of artificial suppression, an $8 projection sounds like an impossible fairy tale pushed by a desperate corner man. But to the elite brawler who understands the absolute certainty of a violently constricting supply curve colliding head-on with exponential institutional utility bandwidth, an $8 valuation is merely a conservative operational waypoint. However, you cannot successfully navigate this high-stakes digital wealth transition without a ruthlessly disciplined, emotionless framework. Human greed and panic are the ultimate vulnerabilities in any bloody arena. I strictly mandate the immediate implementation of an automated execution strategy known as the Thirds Protocol. When the network price violently shatters the historical all-time high resistance parameter of $3.84, you must automatically execute a sell order for exactly 33% of your holdings. This unemotional maneuver secures a complete recovery of your initial fiat capital deployment, instantly transforming the remainder of your digital portfolio into pure, stress-free profit. The secondary operational tranche is programmed to ride the algorithmic volatility toward the $8 institutional target zone, serving as your primary mechanism for total financial liberation from the legacy fiat hustle. The final tertiary portion must be securely encrypted and locked in your deepest cold storage vault for the ultimate long-term macro play. Secure your private cryptographic keys offline immediately using hardware authentication. Thieves are prowling the locker rooms. Execute your cash out flawlessly and walk away a champion.